Welcome to Subramani. I just wrote a piece for somebody saying why we need a annual financial checkup, right? So I started by saying that we all do health checkup annually or maybe once in 2-3 years. If you're younger, maybe once in 4-5 years. If you're older, maybe every year. Because my doctor told me that some of the parameters which are visible in a blood test are useful to take remedial action. I mean, it could be a calcium shortage, could be vitamin D, could be vitamin B12, could be any of those things, right? Or could just be sugar slightly tipping on the higher side. So all these things come out by just giving a little drop of blood and somebody analyzing and telling you what should be the ideal situation and where you are. Similarly, if we can do a financial health checkup, right? What are we trying to do here? We're trying to assess ourselves financially. It is not necessary that it has to be done by a professional, but I do think using a professional is pretty nice, because certain things come out with when a professional does this. So what is financial health checkup? Just like your regular health checkup, it is it helps you understand your current financial status, including your assets, liabilities, income, expenditure, budgets. It can reveal how well you're managing your finances, when can you retire, and what is there some remedial step which you can take, or is there some step which you can take which will improve your retirement, or maybe you will be allowed to retire a little earlier by taking some remedial steps. All this, is it possible? So you also come into saying, let me check my what are my short-term goals, what are my long-term goals. Could be anything: paying off credit card debt, planning your next vacation, and realizing which asset you want to sell. Or say, okay, my national savings certificate which I had bought long ago is maturing, so I will use that to make a down payment for a car. These could be the short-term goals, and the longer-term goals could be retirement, children's education, children's marriage, any of those things. Even looking after parents, that could be a slightly longer-term goal for a 40-year-old. So any of those goals could be there, right? So then you could do a review of your budget. See, what happens is we all make budgets and then we don't follow it up well. So it's like in the month of February you find gyms are empty, right? So it allows you to review and adjust your budget, maybe take on new expenses, maybe you have to pay off a loan which is a cash flow requirement, any of those things. Then you could do an investment review saying how is the performance, how is the performance of the funds, saying I don't want to lose more than 8-9% every year, and over maybe 15% over 3 years, because beyond that I will do a review. Maybe I'll change my fund house, maybe I'll change the fund manager, whatever. Any of those performance checks. Risk assessment: has something happened in your life because of which you want to now take more risk, or you want to take less risk? Simple. You're a 38-year-old, 40-year-old, you have left your job in a nice company and now you're started off on your own. Remember, now your job becomes more like equity than like debt, which it was earlier, right? So when this change happens in your risk profile, do you want to reduce the equity in your investment portfolio, because your life itself has become like equity, right? Or your wife is 45 and she's quit her job, so she was working in in an IIT and she was getting a nice salary. She's now come down to a pension. Do you want to now make changes in your portfolio, right? So these are questions which you can ask. Do your risk assessment, and during your risk assessment you will also ask, is my portfolio diversified enough, right? Then you get into debt management, saying should I be borrowing, should I not be borrowing, should I be buying the second house by borrowing, or should I be making 70-80% of down payment and do 20% borrowing, or should I make 80% borrowing and 20% down payment? Interest rates are low, so should I be borrowing more, should I be fixed rate, flat, fixed rate, floating rate, whatever, all those things. All that is part of your debt management. A very important part of debt management is getting a CIBIL score, or whatever you want to call it, and making sure that you are well within limits. You want to have a nice big score, 750 plus, 800, whatever. Remember recently one father called off the marriage of his daughter because the guy's CIBIL score was not good. So young bachelors, boys and girls, just look at it, because your potential father-in-law is also looking at your CIBIL score, your employer is looking at your CIBIL score. So get your CIBIL score in good shape. That's part of your annual financial health checkup. How well prepared are you for emergency? I hear people saying all my emergency money is in gold because gold has appreciated. That's a wrong way to look at it. Gold is perhaps the most illiquid. Take a little bit of your gold, maybe jewelry, go to a jeweler and see how difficult it is to get rid of it, because at a price at which you want to get rid of it, he'll offer you 2% discount, 1% discount, whatever, making charges kaat ke dunga, or whatever shit. But be ready to know that whether you're ready for an emergency, whether your funds are liquid enough. Try taking the money out and putting, because if it's in a liquid fund, you know how much time it comes. The money comes in. So Friday evening you need money, so you send a request for redemption and you find that the money is coming to you only on maybe Tuesday, right? So check out where it should be and all that, right? So look at that. Look at your insurance coverage. Do you need more? Do you need less? Have your children qualified, gone away? Maybe they've gone abroad, right? So they have to be removed from the family health cover. You don't need them to be here because they're not going to be here. You don't need to pay those premium, right? Same thing, your car premium, your house domestic insurance, if you have health insurance, if you have, check up all that, right? Maybe you check your parents' insurance. That might be more important today when you're 50 than your children's insurance. Children may be able to take care of themselves, right? Look at tax optimization. Should I be investing more in my children's name? Should I be investing in my parents' name instead of giving them a monthly fixed amount of money, right? Check what behavioral adjustments you can do to improve your financial well-being. See what you can do. Can you save more? Can you invest more? Can you change asset allocation, right? And what scares you, right? All those things are important. Then of course there is retirement planning, which is huge. Sit with your spouse, make sure that both of you understand what you're doing, right? If you're the husband who is looking after money, which is there in most of the cases, then the wife should know. And there are some, increasingly now there are more women looking after family finances than men. So then in that case, I think you should sit with your husband and explain to him that his retirement could be earlier than your retirement, or you could of course retire earlier. But explaining all that, sitting, talking to your children about your retirement, all that is important. Also adaptation to some life changes. Some death has happened, and marriage, divorce, death, career changes. All this can significantly impact your financial plan, which calls for a review. I summed up this article by saying, by regularly reviewing your financial situation, you can make informed decisions, which is true. You realize what has happened. Your children realize what has happened. Your children should not take it for granted that you will pay the fees so they can have a luxurious life. You draw the line and say, this I'll pay, this I will not pay, this I'll pay, this I'll not pay. It's worthwhile sitting and doing that exercise. So all this will help you streamline. It will help you you and your family understand what finances you're handling, how you're handling, what money is to earmark for what. All this understanding is very important in personal finance and in financial health checkup. Thank you.